Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I wanted to go over the Gaussian channels and just clear up some misunderstandings that I think some people, including some other even more experienced traders, might have about the Gaussian channels and how people are using them, because not everyone uses the same tools, and a lot of the times, traders and different YouTubers put these other indicators on the screen for other people to take a look at because it's entertaining, right? It's entertaining. Most traders have like maybe two or three critical indicators that they personally rely on top of just trend and kind of structure, which they're able to kind of visually construct in their own minds. They don't even need to necessarily um, take all the technical steps that a lot of people do when making charts for display and for sharing charts, right? Because they can visualize these things. They have kind of an intuitive understanding of the price movement. And looking at these other ways to analyze the market is really extraneous, right? It's just extra. It's a little bit extra. It's over the top. It's added confirmation or added confluence. It's not really something that they specialize in. And so, when some of these traders like criticize, for example, the Gaussian channels, which is something that we take a look at almost every single day or at least every single week, on this channel because of the particular price action setup, not for any other reason, only because of the setup, right? When you get into a trade, you look for the setup, right? You look to see how the price action is orienting itself and what are the market conditions. And when you understand those things, then you can identify whether you have a setup that works for a particular tactic or a particular indicator or not, right? You don't just use it for anything, right? You don't just get into any trade. You don't just analyze everything as if it was equal because they aren't, right? Analyzing this area right here, right, in a COVID dump, just in a freak COVID dump, a flash crash on the entire global market system, and then the injection of free money in emergency orders across the entire world at the same exact time in a coordinated fashion of free money in order to prevent the entire world from just having an economic depression, right? That's going to be a totally different kind of setup than a world in which, the interest rates are dramatically rising, there's global conflict, all of this stuff is settled, and now it's time to pay the dues, from what we ran up. Okay, this setup is totally different. And also the ratio of this price action to this price action is considerably different, right? This is like, you know, 1,700% run up versus, this, right? Versus this to here, or even here, even if we took it from here, right, to this setup, it's only 200%. Okay, so 1,700 versus 200 is quite a different setup. What this price action and this setup is more comparable is to this situation, where there was a, wow, 12,000%, right, run up. Okay, so this, relative, these relative conditions, are just extremely different than this kind of inter this kind of interplay within a leveled off system already. Okay, this is a run up, and this is just consolidation. Okay, so this setup is totally different than this setup. And it's important to understand that because you don't compare like this red zone on the Gaussian channel to this red zone. This is a delay in the chart because this wasn't supposed to exist. It was a effectively it's just a black swan event, right? Just something that wasn't supposed to exist. That's not normal price action. This is, an extreme deviation within consolidation of a bigger era of Bitcoin. And so, first of all, if you just criticize these red zones, that's perfectly fair because if we are on the 5 day and we look at just how few of these macro red zones that there are, there's only one, two, three, four, five of them, right? So this isn't a very strong trend to begin with. However, it is important that you're highly selective about your data sets. This data set right here is invalid. Okay? I mean, it's obviously something you want to analyze, but it's invalid in terms of being the same kind of categorical setup as this setup. This setup is the same. It is categorically the same as this setup and as this setup. And this setup is also categorically the same as this setup and this setup and this setup, not the COVID dump. The only outlier here is the COVID dump. The problem over here in terms of the where the Gaussian channels turned red is not the setup. It's merely the age of the chart. It's merely the origins of the Gaussian channels. The Gaussian channels is essentially expanding, it's basically like infinitely expanding from the point where it starts, right? It starts at zero. And zero isn't a price that it should be starting at. At a minimum, it should be starting at Bitcoin's price, which is like 1 cent over here. But more realistically, had this just been continuation rather than just like a hard reset on a chart, right? We would have had the Gaussian channels curving out under here. And that would have changed the momentum in the system. It would have changed the calculation of the Gaussian channels. But for whatever reason, it's just programmed to start from absolute zero. And so that distorts this chart. This red zone would be moved over had this been normal price action prior to this point. So in terms of a setup, valid, 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 invalid, valid. We only have 1 out of 5 setups that are invalid, okay? So that's already a pretty good start. And, but the thing is, it's not the red zone that matters about the Gaussian channels. The red zone can be a heads up. It can be a heads up. But the red zone is dependent upon a blow off top as a warning. And so what we got here was not a blow off top. We had a slightly different, but here's the key point, comparable setup where we had, instead of a blow off top, we had a double top. And in trading, like everyone understands that a blow off top signals a significant reverse, and also a double top represents a significant reverse, right? Like this, we should not be shocked that this is happening. We should not be shocked. This type of a setup is in fact softer than this type of a setup. And there may be good harmonics and other things that go into this, which can help lift it up. As not only that, but also the sine wave nature itself would help lift it up, as opposed to a blow off top, which is going to be a real kind of like a spiky chart, right? And so the spikiness of this chart is something that we'll have to contend with when we're analyzing the data in the reaction to it, right? Like how extreme low this can go, that is an important question because we don't have the data set for these rounded kind of sine wave curves. We only have it for the blow-off tops. However, the momentum and the setup, not the blow-off top, but the setup is the same. And so these things should be reasonably comparable. How can we clarify the difference in the actual delay? Well, you can see you have one mound here, one mound here, one mound here. And then if I just make this a bit extreme, you can kind of see one mound, slight dip, another mound. And so this Gaussian channel is going to have a little bit of a pull from this area that's biasing the curve that otherwise would have had, probably would have been forming here. This probably would have been dipping down a little bit earlier, and this probably would have been a little bit higher, okay, because the a blow off top would have pulled it up. But otherwise, the setup is pretty much the same. What it did do is allow this to have more of an upward diagonal to it for a little bit longer, whereas this one had kind of a curve that leveled out pretty fast. And again, it's not the red zone that matters, okay? The red zone is just an indication on these setups that you're kind of looking at the inevitable, right? If we were able to just stay in the green, we could just say, hey, we're just in the green, right? So, you know, it's kind of like if the gas light of your car, isn't on, if you don't have that red light on your check engine or whatever on your car, then you just keep driving your car, right? You just keep driving your car. But when that red light comes on, right? When that red light comes on, and you have the same type of setup that you've had in the past, where maybe your engine overheats or something like that, and your car, your car pretty well, then you can just say, okay, well, that's added confluence. Maybe I need to double check my engine, right? Maybe I need to go into the shop and just make sure everything's okay, right? Yeah, I mean, it could blink on randomly, for some reason, right? But this was a totally different setup. This is almost the inverse of this setup, right? This is a dramatic blow off top up and then kind of a consolidation flat, right? This is a consolidation flat going into a dramatic blow off top. It's just a completely different setup. Okay, so this is not a valid consideration. And the key point here is that what you're looking for is the price action under the Gaussian channel. You're not looking for whether it's red or green. The red or green is just added confluence. It's just, oh, if you see that red, on this type of a setup, pay extra attention. But the real issue is the price action under the Gaussian channel. So people who say that the Gaussian channel only has a 50% hit rate, it's because they're like cartoonishly analyzing it in an extremely simplistic way. They didn't even take the basic time to try to understand what was going on, right? They just wanted to dismiss others. And it's common. It's common. It happens in this industry a lot. Like people are afraid to look at new ways. They just want to say that they're right. But this is not if we say these if we just look at color, right? And nothing else, we just look at color. Then we can say there's 1, 2, 3, 4 zones here. And hey, this was a macro low, so invalid. And hey, this was a macro low before the red, right? Before the red. So invalid. And then you can say, oh, 50% hit rate. Forget it. Never going to use this again. People who use this are stupid. And it's very easy for people to do that, right? It's very easy for people to do that. But how about just taking like 5 minutes to think about it for a second, or maybe reviewing, what you're actually seeing on the board here, which is that you're looking for price action. You're not looking for colors. That's just the programmer of this, the same thing as starting from zero. Like that's just the programmer's decision when they started that, okay? The key point is the price action under the Gaussian channel. And here we can see that we got a wick right here. And when you got that wick, that was the strongest indication, you know, start paying attention because you're at the bottom of this tar pit. You're starting to get stuck at the bottom of this tar pit. And then when you fell at the bottom of the under the Gaussian the Gaussian channel, you effectively were buried. You were buried, okay? So here you were drowning. and then they buried you. Okay, like you're dead. You're dead here, right? And so what did this represent? This represented the best opportunity to buy Bitcoin that you would probably have, well, since since here, right? So it's basically 2011, and then you don't get a relative low until 2005. So for the next 4 years, you don't have a relatively, as good position. For 4 years, you didn't have a relatively as good position as you did right here. I mean, yeah, you can buy along here or like here, but again, that was just hit or miss. It wasn't like a macro indication or anything. It just flow. Like you don't know where the price action could have gone, right? Maybe it was just a curve that just kind of flattened out over time, right? But this was your indication. Get in. And then what did we have here? We had a wick. Look, it wasn't red yet. It's not about the color, guys. Like, don't be cartoonish in your analyses, okay? Like, don't don't just like bag on things because it's new or you have to look at them a little bit in a different way, okay? Like we had price action under the Gaussian channel. We drowned in the tar pit, we wicked down. That was a huge red flag for us. And then we actually had price action consolidate under the Gaussian channel, and that was your cue. Buy now. At least DCA in. Buy now. And then what happened? We just continued on our merry way. When was the next macro opportunity to get into the market? We got a wick down while it was green, huge red flag, and then we started to consolidate under there. Okay, you could have DCA'd in on that low, seeing if we broke back up into the Gaussian channel. Now it's turning red. Okay, you're thinking maybe I'm just going to let this play out for a little while. We're red right now, right? Price action fails. This is going to be your best opportunity, for the next, 5 years or whatever to buy in, right? And so you're going to DCA in on that low or on the confirmation of the uptrend from that low. Whatever strategy you use, you can use that because you're under the Gaussian channel to begin with, and the Gaussian channel is red. Those two things taken together are your signal. Yeah, I can load up now. You never got to be under that red zone over here, and so you would have still wanted to DCA in. The color isn't your indicator. Being underneath the Gaussian channel is your indicator. And this is specific to Bitcoin. Other charts may work better with different time frames, okay? You don't have to, apply the same thing to every coin. Okay, people who just want to use like cookie cutter stuff and just apply something and say, "Oh, the color's not right." I mean, don't be ignorant. Like try to put some thought into it, right? And so we're under the Gaussian channel here. This is going to be your time to load up. And it almost didn't matter where you bought, as long as you were under the Gaussian channel. You were going to, as long as you were DCAing on the lows, using proper trading principles, you were DCAing on the lows and maybe on the confirmation of an uptrend. You don't have to be buying the extreme bottom. You don't have to get the best possible price. You can get a confirmation of an uptrend. So you would have bought on this confirmation. Let me zoom in here. Right? So let's say that you collapsed here. You're like, oh no, should I buy or not? Well, you're under the Gaussian channel, so yeah, you should buy. But maybe we could go lower, so you're going to want a confirmation, right, that we're going to getting higher. And then you could say, okay, well, at least we're making higher highs and higher lows. So you could have bought either of these and you just would have DCA'd in. And then, oh no, you went lower. Okay. Well, you could have bought, on this confirmation or this confirmation or this confirmation and DCA'd in a little bit more. It's okay. You're still under the Gaussian channel and it's red. That's a good sign. You're buying at the best prices, right? And then you came down again. Oh, okay. Well, it's not as low as here, but it's equal to there. So I'm just going to DCA in a little bit more. Oh, we went back into the Gaussian channel. That suggests to me that maybe this system is healing, right? Maybe the system is healing, but we've kind of wicked in there before. But the thing here is that we were sitting on top of it. So maybe the system is healing. And okay, we broke back down again, but we essentially double bottomed here. So I'm just going to buy a little bit more on the confirmation. And then you're going to be glad that you DCA'd in all these levels because just look what happened next, right? Just look what happened next. And same thing here, right? You broke down, you could have bought in on that flash drop, and then you had, or maybe you had confirmation, and this was kind of like a little bit of a lower one. Again, this is 5 days, so you had plenty of time. So maybe you would have bought in here, and then you're back in, and you're going to say, oh, I'm glad I bought in, but you broke down again. Okay, well, we made kind of a double bottom here, so that's fine. I'm just going to buy on this confirmation, buy a little bit more, right? It turns red. Maybe you even want to buy a little bit more, but then you're back in the channel and you're saying, okay, I'm just gonna chill out for a little while. Just gonna chill out because we're back in the channel. I know that it's probably gonna test the middle of the channel and then it'll either get rejected or it'll break through. Got rejected. Okay, maybe I'll buy this low while we're in the red. Just if I didn't buy enough here, maybe I'll just buy a little bit more. And then you're gonna be glad that you did because it continued all on its way, right? Same thing here. Wick below the Gaussian channel. Maybe you don't buy. This still has kind of a positive curve to it. You're not going to buy, but you're going to say, we're testing the bottom of the Gaussian channel. Get rejected from the middle of the channel. That's not good. Turns red. That's really not good. Wick down again. Okay, maybe I'll DCN if I have a confirmation. Oh, the confirmation is that we're holding the channel. Okay, I'm not going to buy in, but you know what? It's red and we've broken the bottom. So, if we have these little wicks, maybe I'm just gonna, just get my money ready in case we break down, right? Or if we have a confirmation up, like maybe this curve came up here. And if you have a confirmation, then you can buy on the upside, right? Because as long as you're below the middle, and definitely if you're below the bottom, like any of these little wicks, right, you can just DCA in a little bit. And you could say, oh, well, you would have gotten massively burned here. Okay, but that's why you're trading while you're on the bottom half of the Gaussian channel, right? You're trading in this zone. Why do I keep saying like take your profit, like take your profit every chance you get? When you're at the bottom of a Gaussian channel, you take your profits every chance you get. If you're riding on top of it, yeah, go ahead and just chill out because you bought down here, you bought in this lower half of the Gaussian channel. You can just chill out. You don't have to like always be taking your profit. You can kind of chill out. You just did a macro swing trade. Congratulations. But as soon as you break back down into that Gaussian channel, and definitely when you break the middle, that's what I'm telling you guys. Like just take your profits every chance you get. Buy when you break the bottom of the Gaussian channel, sell when you get to the middle of the Gaussian channel. Buy when you get to the bottom of the Gaussian channel, sell whenever you get confirmation that you're turning around. And if you're not reaching the middle of the channel anymore, hold on to your hats because you're probably going to break the bottom again. Okay? And so that's what happened here. We could never get back to the middle of the channel. To the air bubbles just got bigger and bigger. You drowned, and then they buried you. Right? You're under the ground. You're dead. So load up on all the treasure that you can find in the afterlife, because when you come back alive, you're gonna want to you're gonna want to capitalize on that. And it almost doesn't matter when you sell it. If you bought it here, you can just hold on to it forever if you want to. Right? Same thing here. Right? You could just hold on to it as long as you wanted to. You could even sell it, here if you broke back into the Gaussian channel. I mean, obviously you'd probably want to sell it on a lower high, or, have some type of a strategy for how you're, taking profit along the way. But if you just wanted to hold it for a macro play, that wouldn't have been a bad move. And if you break down into the Gaussian channel, that might be a cue. Okay, maybe I want to take my profit. And if we test the bottom and break down, then you're probably going to want to buy at the bottom, sell at the middle. Just be trading while you're in the bottom of this Gaussian channel. Just be trading, right? If you can prove that you can break out, fine. But if you can't, you're gonna be glad that you just traded that. You didn't wick down here. You can just be trading. Freak accident. We broke through the bottom. We're under the Gaussian channel. You buy. We're significantly below the Gaussian channel. You buy, right? You could wait for a confirmation of an uptrend, and so you could buy here or here or here or here. This was several weeks. You could have just been DCAing in as we get up there because we're still under the Gaussian channel. And then once we got back into the zone, you would want to see if we test the middle. And if we test the middle, if we can break out, and as long as we don't break back down from the middle, then you can just hold on to your position forever if you want to, until you get back to the Gaussian channel. Of course, hopefully you had some sort of strategy up here, but if you didn't, you're still massively in profit. Even if you just used pure ignorance and just using the Gaussian channel, you're still massively in profit. And so, yeah, let's just say that you forgot to sell on the lower high up here, right? You didn't even consider that momentum was curving off, which was very similar to this, right? Very similar to this, very similar to this. Even similar to this, right? Like that was the type of stuff that was starting to happen. And so hopefully you sold up here, right? But if you didn't, then if you broke into here, you still would have been perfectly fine. And then you just would have wanted to wait to see if we test the middle of the channel or if we broke back out. And then, in order for buying, and if we broke the middle, but we didn't touch the bottom and we didn't get stuck to the bottom, right? Then same thing is like here. You could kind of take these trades, right? You could consider to trade in this area, right? We wicked here, got back up. You can take these trades. Even this would have been a great trade, but because you can see, like when we interact with the top of the channel, look how perfectly these wicks are. These wicks are very perfectly lining up with the top of the Gaussian channel. Do you notice that? And so there is something to this, right? Same thing over here. Like it has just kind of an interplay before it breaks back down. You see this wick right here? There's an interplay, right? So if you bought that traumatic wick, that's touching the Gaussian channel, before we broke back down, you wouldn't be the worst off. I'm not saying that's something that you should be using. I'm just saying, like, consider that this is also part of the dynamic. But anyway, you're in this kind of like trading zone because you're now sticking to the Gaussian channel. And if you can break out, but take your profit whenever you can. You should have already learned your lesson if you didn't take your profit here. Take your profit wherever you can. You get back in. You're getting stuck again. You weren't able to break out. You get to the bottom. You wick down. You can buy in here. Can't break the middle. Okay. Break down. Okay. You can buy a little bit more. Can't get past the middle. Okay. Break down again. Okay. You can buy a little bit more. Break up to the middle. Still can't get out. Okay. Right. Well, the thing is, you're probably stuck to the bottom. You're probably stuck to the bottom now. And yeah, something like this could be happening. But you want to be trading this area. You want to be trading the bottom of the Gaussian channel. You don't want to be necessarily holding those positions, right? Um, if you're also getting lower and lower, right? It's never been the worst decision to make to buy in these areas, but at the same time, it's not the best decision to make because you could go significantly lower and you would want to have money on hand just in case we do. We don't have to break down, but just in case we do, you want to have money on hand. And so your strategy is going to be buying here, selling here, buying here, selling here, buying here, selling whenever you get a chance, right? Even if it gets lower and lower, you don't even have to buy anymore because if it's getting lower and lower consistently and you're drowning and drowning and drowning, you're probably going to break down anyway. Okay, that's just the price action is just dying. Okay, it's getting pushed down. In this case, the price action is actually moving up, and we don't have any confirmation that it's moving down yet. So we can't necessarily say that this is going to happen, right? Like we're not trying to make any calls here, just trying to explain a strategy in case we get stuck to the bottom while we're now turning red, right? In which case we may be entering this era where we stop reaching the middle of the Gaussian channel. And if we are entering an era where we stop reaching the middle of the channel, because we were green up here, right? So, I mean, just we don't have that much to say. We can only trade the bottom of the Gaussian channel. That's all we can do. That's all we can do. And trade to make sure that we don't get stuck in that. But now that it's turned red, the next time that we break the Gaussian channel, we're just going to want to be probably buying confirmations. And one of these days, the confirmation is going to take us all the way up, right? And we don't know how low that we can go. but you can probably safely DCA in if we reach the bottom of the Gaussian channels. And this is how you make it work. It's not a matter of the color, guys. Like, don't be superficial, right? Don't be ignorant. Don't just dismiss new ideas, okay? And just because some like senior traders like say something, it doesn't mean that they're necessarily right, or maybe they're not wrong, but they're maybe just focusing on the wrong thing, right? Like some guys are also like really heavily talking for a long time about the hash rate and the hash ribbon and all of that stuff, and how we never will go lower than whatever the hash ribbon signal fires off, and it only happened once during corona, which by the way is the same outlier as the Gaussian channel, right? So from that perspective, from the hash ribbon versus the Gaussian channels, honestly, I give the Gaussian channels a much better advantage than the hash ribbon, right? And if you use those two in combination, you would probably be even more powerful, right? But in this case, the hash ribbon indicator completely failed us. Whereas the Gaussian channels gave us just huge cues that we should be trading this area and preparing ourselves for the possibility of a macro dump. Even before the Federal Reserve came out and said, all of this stuff needs to be corrected, the market's overheated. Even back here, it was flashing us cues. And so, you know what? I'm not going to throw away this indicator, even if one of my hero traders dismisses it. I want to give it a fair chance. I want to give it a fair chance, right? Because we all can be wrong. Like, and indicators are not perfect. Indicators are not, you know, gods, right? They don't predict the future, right? We're not psychics. The best we can do is create strategies that work for us, where we understand the tool that we're using because we're spending enough time with the tool that we're using so that we can start making decisions for how we trade. And if you're trading level by level on the hourly or whatever, or the 4 hour or the daily, then maybe you're not seeing, the swings in the 5 days, on these like quarterly to like multi-year swings. But for an indicator that has only flashed 1, 2, 3, 4, now 5 times in the life of Bitcoin, it's something that you want to pay attention to. Yeah, maybe something anomalous is happening, okay? And yes, this isn't a big data set. It's not hundreds of instances, but neither was the hash ribbon indicator. And neither is a lot of the other exotic indicators or strategies that you use, including, like a momentum extremes, etc., etc. Like those things might be rare events, but we still pay attention to them because when we use them in confluence with each other, it gives us just a much more powerful picture. And so, yeah, am I going to be looking at momentum on the 5 day? Yeah, I'm going to be looking at momentum on the 5 day. Am I going to be looking at the hash ribbon indicator? Yeah, I'm going to be looking at the hash ribbon indicator, even though it failed in this instance and it failed in the Corona dump. It doesn't mean that it got it wrong on the other cases. And so it's another point of confluence. I'm going to be looking at that 5 day momentum. I'm going to be looking at the hash ribbon. I'm going to be looking at the Gaussian channels. And if I just have a small set of indicators that I use for confluence in combination with our own style of trading on whatever time frame that we're trading on, then you can be more successful than if you just go into it blindly, right? If you just go into it blindly. But the essential part here is that you have to understand the tool, right? You can't be superficial and you can't be just dismissive just because just because it's somebody else's idea, or that you trade in a certain way for a certain number of years and you're just used to your way, right? Don't get caught up on the color on this channel. The color, you can almost make it, you almost don't even need color on it, right? You almost just need the lines. The colors are just an extra layer of confluence. What you really want to see is whether or not you're breaking down under the Gaussian channels. Yes, we are. Best price ever. Yes, we are. As long as we stayed there, it was the best prices ever. Yes, we are. As long as we were there, the best prices ever. It almost doesn't matter where you bought in this area, right? Doesn't matter. Almost doesn't matter where you bought. But if you use other trading principles while you're falling in this area, if you buy on confirmations and you have, some understanding of how price movement might go, then you can hit the, very close to the low points when you're DCAing in, right? And you can also understand that you don't go, past certain, extremes. Like you're probably not going to get past the 300, you know, uh, you know, EMA on, the weekly or whatever. And so let's see, let's put the EMAs here. So for the 5-day, yeah, so you can see my settings here, right? That's this white line, there's the gray line. It's 8. Yeah, the 300 EMA on the 5-day. You're probably not going to get much lower than that, right? So if you're on the 5-day, let's see what the weekly says. Yeah, you could do the 300 on the weekly. It looks like it would skim around here. But anyway, between the 200 to 300 on the weekly and around the 300 on the 5-day, that's probably as low as you're going to get. And so if you're approaching those lows, which would be approximately 25,000, should we dump right now, then you would probably just want to load up all you can. Because while you could get a flash wick lower, maybe you could get some price action lower, in which case you can just buy more because it's basically going to be free money at that point. At least you have some areas to target. And then, what can we say is a minimum? Again, like the limitation of the EMAs here, like the EMAs don't even go as far back as the Gaussian channel. So for example, the Gaussian channel kind of screws up on color here because it starts from 0. But you can see why they did that, right? Like the EMAs, look, see how this EMA line just stops running? See how these EMA lines, let me turn off the Gaussian channel. You see how these two EMA lines, they just stop running, right? This one stops here, this one stops here. This data exists. It just, instead of doing a calculation, like a projection, they just stop. And it's the same thing with the Gaussian channel. Like it doesn't have enough data back here, so it's like stopping basically. But I think if this and this actually is stopping after this one. So I think if this one just had a little bit more data, or I believe that this would have flashed the color indication in the right area, and that we shouldn't be biased against the origin of the chart. Okay, like we would have to say that our EMAs failed also, but the EMAs didn't fail. It's just on this time frame, it just can't extend that far. It just doesn't have enough data to get a perfect answer, and so it doesn't want to answer at all. The Gaussian channel gives you an imperfect answer because it tries to answer, but it just starts from an irrational, point. And so again, like your tools have different limitations on them. As long as you know your tools, like you should be fine. If you're under the Gaussian channel, feel free to DCA in. And if you ever hit like the 300 on the 5-day or the 200s on the weekly, load up as much as you can because that's going to be the best buying opportunities of your life. And if you get a wick lower, congratulations. Like if you caught that wick, like congratulations. A lot of people might just be at work or something when this thing wicks down like that. They can't catch it. But if you were able to, congratulations. Okay? If you had your orders in or whatever and they filled, then congratulations, right? And so people who say, well, don't talk about these prices in the 200s, the lower 200s. Well, on the weekly, we can see, that's 20,000, right? If it keeps curving up, maybe that's going to be 22,000. So why wouldn't you? Why wouldn't you shoot for that? And after everything, I've talked about this Gaussian channel, why wouldn't you just consider it? Why would you dismiss it, right? Don't dismiss it. I mean, if you think that like we're gonna skyrocket, okay. I mean, I understand. Like you can make your plan for skyrocketing. I understand that. That's an important plan to also have to understand how you're going to manage your money on the upside. But understanding how you might manage your money on the downside and what type of indicators and what you're going to be using to try to understand what might be possible is also critical. Now, one of the things about the hash ribbon indicator, which even Crown, for example, who is famous for using it, um, didn't perhaps consider is that maybe it means something on a different time frame. Like maybe it's not so much that price action never goes below there on the daily or the weekly or whatever, but maybe it's possible to wick there on the monthly or the quarterly. Maybe it's quarterly. And so maybe the hash ribbon worked perfectly fine because on the quarterly, we look like this, right? Like it's not terrible. Let's see, what's the hash ribbon? Hash ribbons. This one, right? Let's see, this one flashed approximately here. So on this low, which would have been 38,000 approximately, 38,000. And supposedly you never get below that again. You never get below that again, right? Well, we got below it. Okay, like several times. But but what if it's not really, about the daily or or the weekly or whatever? Let's see, what was the weekly here? 36? Let's see, how about the 2 week? You see, the 2 week lines up almost perfectly. 37, right? 37. How about the monthly? The monthly is 38,500. So if we think about the hash ribbons, maybe, for example, Crown's interpretation of the hash ribbons was wrong. Maybe we actually don't get below 38,000. And maybe that's just how it is. Yeah, we can wick there, but maybe we just don't get below 38,000. And he had an episode where he was quite angry, about not angry, but frustrated with on-chain data guys, right? Quote unquote on-chain data guys. And their claims like with the hash ribbon stuff. But so far we haven't actually broken the hash ribbon indicator as it's signaled on the daily or whatever, any of the time frames. It's just always the same. Because it's just like an actual moment. On the monthly, we didn't break it yet, right? And so on the quarterly, like we're way away from it. So what if it's actually just more of a quarterly indicator? And yeah, you look at it on maybe the daily, but what if it actually refers to like quarterly pricing? And what if we just wicked down to like this type of wick, right? This type of wick. Maybe we end up having our price action above 38,000 on the quarterly, and we just have a wick, which a quarterly is 3 months. That's plenty of time to like get a wick down to anything. Could be 20,000, could be 25,000, could be 28,000, could be 33,000, right? 33,000 could be the low. I'm not trying to be biased here. I'm just saying. It could be the low. But we could wick into these areas on a 3-month wick because it's 3 months of price action. Like it can happen. And at the same time, we could hold above 38,000. We're at 40, we're at 43, right? It just that's where this price action is. And it wouldn't violate the hashtag. I mean the hash ribbon indicator. Just maybe the time frame was wrong. That's all. So you kind of have to fool around with these things. Like it's not like no indicator can be perfect. No indicator can be perfect. And let's see. Make sure I had that right. Which one was he looking at? The weekly? I don't know, but I'm pretty sure he was talking about this one. So whichever one it was, I'm not sure why there are so many over here, but yeah, I'm not an expert on those hash ribbon things. Just trying to point out that just because an indicator doesn't work on one time frame, or just because it can't be understood in one way, it doesn't mean that it's necessarily totally defunct on every time frame or in every way. So again, look for wicks underneath the Gaussian channel. Don't focus on the color. The color is just added confluence. And we've already gotten wicks under the Gaussian channel. If that ended up being the only time you had to buy under the Gaussian channel, I mean, then hey, congratulations. Like whoever bought here and here, you were under the Gaussian channel and maybe you bought the best prices of the lifetime to come before us. But if we look back, just historically speaking, there are kind of like these bottom indicators before we end up breaking down, little wicks down here that we broke down, touching the very bottom here, could have very easily been a wick, and then breaking down, touching the bottom, kind of wicking, and then we break down, touching the bottom, wicking, and then break down. And so what you would expect, especially if this is also turning red, is that we've touched the bottom, kind of wicked down, and then we might consider, if we visit the bottom again, we might consider, okay, we had our wicks, we're touching the bottom, and it's red. And the macroeconomics of the situation aren't good. So probably we're going to break down, and I want to have my plan in order. Uh, I don't like necessarily being, contentious or anything. It just sometimes I feel like in this industry, people dismiss ideas because I don't know. Maybe a lot of people come from trading stocks and things like that, and it's just a very formal world. But uh, the crypto industry isn't that formal. Like we're just kind of funny people like doing our own thing, very independent minded. Some of us think very tightly inside of boxes with very technical and fixed rules and kind of serial thinkers, kind of those mathematical um, programmer types, right? Who need that step by step and a certain type of consistency. Other of us are like and those guys are great. They can be like dev teams and stuff like that, right? Like they make amazing projects also, like take it to an extreme. Like they're the ones making these cryptos. But at the other side, there's like people making NFTs and they're just making like beautiful art and they're making games and they're trying to find things that are fun and they're trying to identify patterns and fractals and weird stuff. And it takes both. It takes both, right? So we can't just totally dismiss something just because we don't understand it. And we have to be open-minded that tools that we may have used one way for ourselves, that maybe other people are using them in other ways. And it doesn't make sense to dismiss it, right? It doesn't make sense to dismiss it unless you've given a really thorough examination and asked the people who use it, like how they use it. Don't just um, don't just dismiss it. For example, I love harmonics. It's just I find it extremely boring. Just find it extremely boring. I love harmonics, and I love the fact that people measure all of these increments and they find these things. And in fact, I may maybe down the line, maybe I'll start incorporating some of that just to better myself because I know I'm a little bit sloppy and a little bit more, you know, I make, my charting into art rather than science, right? But at the same time, I like to have these more wilder thoughts and I like to be a little bit, I like to challenge older ideas because by challenging the ideas of the people who are those serial thinkers, like I can be a better creative thinker. And it's very important that those other people exist and that they are, setting certain standards because otherwise there wouldn't be anything to challenge, right? And whenever somebody says like, "Oh, this isn't good," then I try to find a way in which it's good. And if somebody says like this works all the time, then I try to find a way in which it doesn't work, right? It's a little bit contrarian. It's just kind of like people who are a little bit artistic. They like to break things down. That's the creative process. And so I probably wouldn't have even pointed out these things, which for some reason are kind of like intuitive to me when I just look at it. I get an intuitive feeling about it, and but for others, maybe they need a little bit of instruction, like an instruction manual, how to use something. And if the instructions aren't clear, then maybe they just throw it away, right? But I would say don't throw away the 5-day Gaussian channels. Specifically for Bitcoin's chart, I would say look for when we break the middle, and if we break the middle, you go into trading mode. If we break on top, yeah, you can stay in holding mode if you want. Okay? But as long as we're under the middle, have your your trader hat on. And if we start wicking on the bottom, consider to start DCAing in. Don't be terrified to DCA in a little bit. On the first wicks, you may want to be a little bit conservative. You may want to only buy on confirmations. You don't have to capture the absolute bottom. You already know you're buying at relatively good prices. If it turns red, and it doesn't always work, right? Because we're not focused on the color, we're focused on the price action. It would be incredibly superficial and kind of ignorant to focus on the color rather than the price action, right? Because the price action is all we're talking about in trading. And so you follow the price action of where it is at these relative levels. And if you're underneath the Gaussian channel, you should be loading up. And if you ever bought at the top of one of these like peaks, right? If you ever bought up here, then how can you be afraid underneath the Gaussian channel? Like, give me a break. Okay, give me a break. This has only happened 5 times in Bitcoin's history, and we're entering one. You should be really happy to be thinking about this indicator in combination with other things, right? EMAs, hash ribbons, the Gaussian, the blah 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 blah. Okay, the volatility on the 5-day or whatever you want, right? And then also use confluence with those things like the extreme nature of the MACD on the monthly, that sort of thing. But don't just dismiss these tools. Like some of them are really showing you a very clear picture. And it would just be inappropriate to dismiss it. Okay, guys, that's your alpha for the day. Stay safe and happy trading.